What's going on, everybody? You know who it is. It's Austin, aka More Than an Agent. And this is the Real Estate Blueprint podcast here with my Dominicano hermano, Jonathan Soto. Soto, what's up, man? How's everything?
All is well, man. All is well. How are you?
There we go. The daily grind. I'm gonna try to turn that into a daily podcast, a daily day by day behind the scenes interaction. I'm gonna call that the daily grind. We see what happens now. But today's guest, definite staple in the community. If you're from New Jersey and if you're doing business, especially in the northern New Jersey area, you know who this man is. But for everyone who does not know who this individual is, this man's a serial entrepreneur, especially in the real estate space. He's a developer, he's an investor, he's a lender, which is what we're gonna use today's episode and his precious time to talk about. And he also is the CEO of Level Up Group, which is a collection of businesses within a major business. So in those cases, he runs under that company. He has an inspection team, a home inspection team, a home inspection company. He has an appraisal company. There's developers under that group. So he's really
Not
doing his
not
thing.
not appraisals. The construction company is actually under there.
Just a
And
construction company.
we have architects. Yes, we have architects.
Architects. All right, so throw out the appraisers and we bringing out the architects. But ladies and gentlemen, I'd like to introduce you to J T Morel. JT, I appreciate you taking the time. I appreciate you sharing your government on the post. So congrats on the exciting news that you got going on there.
Thank you so much.
All is love, man. We'll kick it off. We'll start it off. Listen, man. One thing's for sure that one thing that I did learn today. Thank you for your service. I didn't know that you were a veteran. So we thank you for your service on that aspect. And my first question was going to be how'd you step into real estate? You got your hands in a lot of different fields within real estate, but how did you get your start? Where did you get your start? And did that transition right out of your time in service?
No, actually, it was way before. I actually started doing real estate in 2003. Come from humble beginnings, troubled background. Like most of us that are from an urban community. I'm from the Bronx. Parents got divorced. Pretty much went through a whole phase, a whole dark phase, stuff like that. And someone who was there at the time actually told him, like, yo, dude, like, you don't belong out here. Like, you're running the streets, yeah, but at the same time, you're not at your full potential. So, and he's like, you should be doing real estate. I'm like, real estate? I'm like, whatever. Like, what is this? So he told me, like, come by and something told me, he's like, you know what? Check out these checks. I was like looking at these huge checks for like 17, 20,000, 25,000. I'm like, you know what time it is with those. So I'm like, hold up. What is this? Like, I'm like 19 years old at the time. I'm like I said, doing all kinds of bad things. I'm like, this is maybe where is that? So fast forward, got into it. Was still doing what I was doing. And I was actually like fixing people's credit because at the time I was like just doing rentals because I didn't know any better. So I still did my side hustle. And like, I was like, you know what? I need to figure out exactly how to get sales. So I got my guys to actually go ahead and there's a train station on the 6th train on Castle Hill that pretty much like you can attack both sides. So I had them like, I'm handing out flyers. I'm like, I could get you a house for free and fix your credit. People were like, what? I'm like, yeah, just go to the real estate office down the block. Boom, gave them the address. People were coming in, right? Which is dope because I didn't know anything about fixing credit. I was actually winging it at the time, you know? So it was a lot of
sales though.
Yo, listen, man. I was like, you know what? That's the way to do it. Because back then you can do 100% financing with just stated income. As long as your credit was good, you could work at McDonald's and afford a $500,000 house, you know, because the regulations were a lot different than they are now. Now it's a lot more regulated. So, and then on top of that, you have the seller's concession. So, and like, you didn't actually have to come up with money if you actually think about it. So it was like, I was selling this and I'll have these clients come in and I'll put them in the pipeline for a couple of months. I was like trying to figure out exactly how to fix their credit and stuff like that. And I got it. So I actually opened up Credit Advice. That was actually one of my first companies. And that was like credit repair. So I started doing that. And I was literally selling people's houses, like selling people houses. Like they'll come in, the first house they see, I'll tell them like, listen, this is it. This is the house. Like, this is the only one that's actually going to go ahead and give you like the seller's concession. Like, if you don't do that, then we have to wait until we get another property that has a seller's concession. And you see what I just did with you? I just did with a whole bunch of other people. So if you don't take this, somebody else is going to take it. So it was like a little mill. So it was just running. People would just take the first house that they see, you know. And I started building on my real estate portfolio in Albany and Troy. Still own those properties, and just about there's 7 of them over there. I had a friend of mine that was actually going to Albany U at the time, and he was actually like, you know what, it would be a great idea to actually go ahead and manage it over there. I wish I would have actually done it here in New Jersey instead, because the property values back then were stupid. You're looking at 40, 30,000 for like properties in Newark. Now they're like $500,000, you know. So, easy. But going back and fast forwarding towards that is got into it, sold a lot, got my property, started doing that. Then I started realizing something in 2007. 2007 is when a lot of people actually started realizing that these balloons were actually going ahead and the adjustable killing everybody. They're like, and everybody was coming back to me because I was the one who was helping them throughout the entire process. So it was like, holy shit, like, excuse my French, sorry. Like, what are we doing? Like, and I'm like, dude, I'm like a car salesman for real, and like for properties, for houses. Like, you got to talk to who did your mortgage. Like, that's exactly who you really got to talk to. Like, I don't know nothing about the financing. I'm just a sales guy, you know, like, so. But I was telling my the person I was actually with, my fiance at the time, and I was like, yo, the market is shifting. The market is shifting. Like, something's going on. So I saw one of my cousins actually doing an Army of One commercial, and I swear to God, I took that as a godsend right there. It was like around November, December of 2007. And I saw my shout out to Kareem. He was doing that Army of One commercial, and I was like, holy shit, like, that's the answer right there. Because I used to do, I was in a cadet program for a couple of years before that and all that good stuff. So I like the Army stuff. So it was like my thing. And I joined up in January of 2008. And then around March, April, everything went to shit in 2008. So it was definitely something that that like changed the entire aspect of exactly how I think about it. And I was like, wow. But even throughout that time, like, my first sergeant, when I was actually stationed in Texas, like, he was ready to retire. So I was helping him look for short sales and like build up his own portfolio out there in Georgia and stuff like that. Like, so he kept me kind of close. So I was actually working in the office for a little bit.
Oh, so that's it.
Yeah, you know, like, real estate's like always been my cornerstone with everything, you know. So I did the active duty for 4 years. And then I did the reserves. What should I say, the National Guard for another 8. I did 3 tours. Went to Iraq, 2009 and 10. Afghanistan, 2012, 13. Jordan, Kuwait, 2000. 18 and 19. I got out in February of 2020.
Oh, wow.
Yeah. So it was throughout that time, like, it was so many things going on. I was like, you know what? I need to solidify my position, because I have a lot of people, but the whole thing was that I was always gone. I was coming and going. So it's hard to keep relationships. It's hard to build up businesses and stuff like that when you're constantly away. So I took it upon myself to actually go ahead and just like leave that point of my life and actually just focus on me, focus on exactly what I think I can go ahead and create with the people that I have with me, you know? And that's literally when like the pandemic actually happened. So February hit, March, the pandemic happened. So I was like, holy crap, like I got out of this and now all this and now everything's frozen. I didn't know what the hell to do with myself because nobody was lending at the time. And the people that were, they wanted like 45% down payment, even with experience at the time. It was
Eesh.
yeah, the pandemic was definitely something different, you know.
You did it backwards. It's interesting, and not to say backwards, but you did it most of the time. People are coming out of the army to go into real estate, right? Or out of service, I should say, not necessarily the army, but like they're coming out of service and then they're going to real estate, and that's usually the first time that they're touching real estate. But you actually went vice versa, like because of the crash. Are you seeing the remnants of another crash based off of like what you're seeing just
No,
off of the lending side? Do
no,
you see the same
no.
thing? Because you've experienced that where I
Yeah,
say like me and Jonathan, when we came in on an upward trajectory and haven't seen that. And most of the people that, maybe in our audience market or even our clients, we haven't seen that just yet. So like we're all, kind of paying attention to that. What are you seeing on your end?
so right now, the difference between back then and now is literally education. There's a lot more educated buyers. There's definitely a lot more educated buyers. And on top of that, there's a lot more money that's actually being funneled within real estate. Before, it was a lot of paper that was getting funneled through real estate. It wasn't necessarily money. That's why I was selling houses pretty much with no money. You know what I mean? So it's a whole different ballgame. Like people are actually making money now. Like on an
Can you
average,
elaborate on that? Like as far as like money versus paper? Because I can understand from an intrinsic value, right? There's like cold hard cash that is being used like amongst the banks, and then there's like just accepting the contract and the liquidity of that contract,
yeah.
right? And then just going based off of that. So can you just elaborate that just for like
Okay.
the
So
listeners?
what was happening before was a lot of people that wouldn't normally qualify, and this happened with the regulation change. So a lot of people that wouldn't qualify before, or should I say, like did throughout before the pandemic, no, should I say before the first crash. And now we're not gonna say the first crash, before the first crash of our lifetime, right? There was a lot of people that wouldn't qualify. Like you had people working at McDonald's, like Blimpies, or like retail people, like they were making like 30, 40,000, right? But they had great credit. And just because they had great credit, they would qualify. So just because they had
Gotcha.
like
Yeah, it was a
660
ninja loan.
better.
It was people with no income, no job, no assets, and they still qualify for loans. Basically, it was like I trust you type of thing, which is kind of very odd for a 500,000 mortgage that the
But that's
payment can go up over time and have a balloon at the end. It was disaster.
yeah, with an adjustable rate, because adjustable rates are coming back already. But that's that's a whole nother conversation. But it was just all those people that qualified before, after the regulation change. Now they're actually doing. That's why there's so much paperwork now. That's why it's so thorough, because they don't want the same thing actually happening again.
Yeah.
And that's literally where we at now. Like now there's a lot more money. And when I say money, it's literally like there's more people that actually are making more money. And I'm not necessarily talking about in the industry. I'm talking about like clients, and they qualify. They're actually bringing in, they can go above asking. Like we were seeing that throughout the pandemic. People can be like, you know what? I can put another $50,000 over that,
Right.
just so I can get the house, So that actually changed a lot, because back then there was a lot of people that had no money and they were buying houses.
Right.
So that's the biggest dynamic, the biggest change that actually happened there. And then on top of that, the education that everybody has. Everybody's actually more aware of real estate and exactly the impact that it can actually have on your life. Before, people were just like, I just want to own a home. That's all they knew. They didn't have no education. Now there's so much information on YouTube, Google, all these first-time home buyer programs that I'm pretty sure you guys even do, So there's so much education out there, you know. Everybody on Instagram, there's like other influencers like myself and others that are actually out there educating people, and it's out there, you know. It's just asking questions, really, you know.
Yeah, the number one thing for regulation for '07 was the ability to repay. You cannot get a qualified mortgage for conventional FHA unless you're below those ratios, those ratios for FHA, ratios for conventional. So it's tighter, definitely tighter restrictions and guidelines than what it was before.
Exactly. You know, and I wasn't a lender. I was just a regular real estate agent around at those times, you know. I just had a couple of houses because I had a good run at the time, you know. So, but that's literally how I kind of like started into it. Like even on the flipping side, like just getting into it, like when I was actually started flipping and everything else, I was doing that in New York. I had my whole investment group and everything else back there. The partnership that I actually had there, in New York, kind of like faded away because guess what? I couldn't keep up with my with pretty much exactly what I was doing here while I was still in the military, because I was overseas and my partner was taking care of everything here. So like we had our disagreements. We split ways, but I understand because at the end of the day, I wasn't present. I couldn't do much, you know. So I came here to Jersey and like I had to build everything from scratch, everything completely from scratch, you know. And trying to find good contractors is like, I think any investor could tell you that, like it's hard. So
it's beyond hard. Hard is taking it lightly. Like I don't understand. And the only reason why is because it's so confusing at why it's hard. That like it's hard like just to like do it, but like it's hard because like we can't even like comprehend why it's so hard for like these interactions just to go smooth. I've just never
I can tell you exactly what was the issue there. Like the problem is with a lot of contractors, they're tradesmen. They're good at what they do, right? The problem is money management. That's the biggest issue there.
And the community and the freaking customer service department. They don't have like
there is no customer.
Non-existent.
There's just a guy like it's just a guy with a crew, and he's just going out and doing jobs. And that's what like most of these contractors do. Like it's just a crew that goes in there, does exactly what they need to do. There is no customer service. There's just he's representing himself. He's doing exactly what he does, and they're not educated on exactly how to take care of a customer, how to actually articulate certain things, and even actually manage their money, because they are actual business owners, you know. So because they don't know how to manage their money, they're taking your money, right, that you're getting from this job to finish the job that they actually did, or should I say that they had before. And now they're going to look for another job to start and to finish out your job, you know. So it's a never ending cycle with them. They're always in the negative because of that fact, you know. So they're constantly chasing the next job to pay off or finish out the job that they're doing now, because they already ran through that money, you know. Luckily go ahead. So luckily when I started doing the construction, little by little, I was with my partner Nathan. Shout out to Nathan. And we were like, dude, we need to go ahead. He was actually a bank manager in Wells Fargo, and he's like, you know what, I'm gonna leave the bank. I'm like, all right, well, I left the military. You're leaving the bank. We're all in, you know. So that's it. So he came in full time just about literally a couple of months ago. That was holding down the fort. But you know what? I believe in the vision that we were doing, because I started the investment group here. I was doing hard money and everything else. And the key thing that obviously you need to control is the construction. Once you control the construction, everything's smooth sailing from there. But that's actually the most part to control if you don't have it over, you know. So he started doing that. My brother came on as one of the lead foremen. Like he was actually in the union. My whole family's in the construction industry, so he was in local 731. He came on. He started helping out with the whole situation. Started navigating exactly what he needed to do. We had just about like 3 projects going on at the same time. So he was helping out with that. My brother, Nathan was going into it. Like little by little, we started building out pretty much an infrastructure and like creating crews within ourselves so we can actually expand, right?
And was this before the first flip? Was this all before the first flip, or
No,
this was just
so this is all during. So my first flip was a disaster, bro.
Yeah.
Let's talk about it.
Yeah, let's talk it. And how did you make the transition from like, because it seemed like lending wise, like you started off in lending as you know, like that was your first piece of the pie in real estate.
Actually, it wasn't. So the lending, what happened was, like I said, I had an investment group because all I did was invest in real estate, and then I had other people that were interested in investing, but they didn't know what to do. So I kind of like started guiding them through everything. And since I was guiding them through everything, I was like, you know what? I need to learn how to monetize through guiding, you know? So I was going ahead, finding deals. I was going ahead, doing assignments, wholesaling, right? Then I was also doing the lending, right? The lending actually came in with that because what I was doing prior to that, I was doing like business loans and stuff like that. Like I knew exactly how to finagle the paperwork. So I started doing that for them, you know, but for a fee. Everything was for a fee, you know, because at the end of the day, everything, you know, we're all working towards something, and nothing at the end of the day is free. So that's literally how the lending portion actually started coming into play. I just started perfecting it because I started out as a broker. Then after that, I just started, I joined up with Alpha. And then after that, I went in and pretty much kind of like did my own little spinoff, just to actually help out, because each lender has different criteria, right? And like Alpha is a good company, but the whole thing is with them, they just some loans they don't actually, it's not their appetite. So because of that, I have to create another stream to pretty much finagle or funnel those people through another loan process, right? It's just like with John, like some deals he can't do, so he got to go ahead and like broker it out or figure out exactly how he's going to go ahead and get this deal done. You know, same process. That's all it is. So with that side, that's exactly how I actually started getting into it. You know, so yeah, I have my hands in a lot of different things. So
I noticed that you were focused in New York, and then now you're in Jersey.
Correct.
And you built that relationships. How did you grow the relationships? How do you know which market to tackle coming from one state to another state to build that rapport that you have now with your relationships?
And what would you say was the difference between that and when you were overseas? Because obviously real estate, like, you know, we try to pride ourselves on making sure that it's something that can run with us not being there. So as you talk about you building your relationships, talk about kind of like why that first partnership didn't work out, because that, you know, it's discouraging to hear, because that's the reason why we do buy it and the reason why we do have partners to run it while we're not there. So dive into that.
So we were pretty much, we were acting as the active investors for those people, because most of those people were like doctors, lawyers, pretty much high-end money that was actually coming into us. They were pretty much like funneling through at least 80 to 100 to 200, 300,000 through us, so we can go ahead and flip, right? Now, what happened there was when I left, right, I had to leave for a year. I had to leave for a year and change, right? Because throughout AT and stuff like that, like pretty much pre-training prior to actually deploying, and then deploying, and then coming back, like on the demo side. So it was a lot of time, and he was handling more of the pretty much the front end stuff and even the back end stuff, because sometimes the time difference, you know, that was actually giving us a run for our money. So I was dealing with, like, it'll be, I don't know, over here it'll be 5 o'clock. Over there it's probably like, I don't know, like 2 o'clock in the morning or something like that. You know, so it was, the time frame was so messed up. So it was hard for us to actually go ahead and coordinate correctly to actually go ahead and grow the business. So he was like, you know what? these couple of years was good, but I really can't do that. So what happened was he was kind of like putting a bug in their ears, like, oh, we can do this without him because he wanted a bigger share, whatever the case may be. Like, it is what it is, you know? So when I came back, obviously he gave me my portion of everything, and we kind of like split ways. It was no real black blood. It just more like, you know what? It is what it is, you know? Not to really dive into it, you know what I'm saying?
Yeah.
I understand. So now that happened, you switched over to Jersey. How do you know which market to tackle, which relationship to build, which area to take over?
This is book, Machiavelli's Prince. I don't know if you guys actually read that book.
You said Machiavelli's Prince?
Yeah.
No.
So it teaches you, it teaches you exactly about mannerisms and pretty much how to go ahead and not manipulate, more like influence others to actually go ahead and do exactly what you want, right? It's a great book, written by Machiavelli, you know. So it was something, when I read it, like I started implementing it, you know, mannerisms, on reading mannerisms, seeing exactly how people would actually react towards exactly what I say, and seeing exactly what is it that they need that I can go ahead and provide. So it came down to exactly what people need out here that I can go ahead and provide, right? At the time, there wasn't really that much going on over here. And I was like, you know what? It's pretty much up for grabs. Let's go ahead and tackle it, you know? And it all comes down to networking, you know? Like, I'm a firm believer in networking and relationships. I'd rather mess my side up before I actually go ahead and mess up a relationship, because the relationships, when you actually like tarnish it, it's hard to repair, you know? As for actually, like, on your personal side, if you could take a hit, you can fix that, you know what I mean? But a relationship is hard to actually fix, but it's great when it's growing, because you know what, that relationship will continue giving you flowers and giving you exactly what you need on a constant basis. So you can always ask, and that's a big thing. You can always ask, and people will always give, as long as you actually have the street cred. So it's the only two things you need in life: street cred and actual credit. You know, if you have both of those, you good in the book. You know what I'm saying? You good everywhere, because your street cred goes a long way, because that's literally what your network does. Your network, like, yo, he's a good dude. He goes ahead, he pays his bills, he does what he needs to do. All right, cool. Yo, next thing you know, you ask for like 60, 70,000, go ahead, do another flip. Guess what? Yo, that's easy. Just sign some paperwork, promissory note, people give it to you. You know what I mean? Like, you don't do bad by others, and people will always go ahead and take care of you. And again, networking. Like, I was in the streets, like I was in every single event. Mind you, there was a whole pandemic going on, and I will be wherever I need to be. Everywhere.
I can attest to it. I can attest to it. I mean, you're at all the events, all the conferences, right? Like, this is nothing new, right? Like, very familiar face, and that's exactly why I started off this podcast by saying, you know, if you're in New Jersey and you're in this space, then you know who today's guest is, for that very reason. So you're actually practicing, you know, exactly what you preach. But before we just talk about what's next, like when you want to take the business and things like that, I want to talk about just hard money in general.
Okay.
Because everybody that, you know, especially for our immediate circle, everybody has either done their first deal or they've done a couple and now are looking to take it to that next level, and are now no longer, respect to Jonathan, but now no longer are going to Soto for that conventional or FHA loan. So just bring us into, which for everybody listening, you know, Jonathan is on the QM side, qualified mortgage. So John is on the QM side, where they are attaching basically your financial capability or the ability to purchase the home based off of your own financial situation, your debt to income ratio, your credit score, your assets. It's based off of you. It is personally based lending. JT is on the hard money world, which focuses on asset-based lending, in which the case that, you know, JT is lending on properties where you may not have the best credit, you may not have all the cash, you may not have, you know, 10 properties under your belt, but they will look at the property as far as the deal and the ability to make money on that deal. Whether you are looking to flip or whether you are looking to buy and hold, they look on the opportunity, or they look at the percentage of what they're able to make money on the deal. So JT, just bring us through both, give us both scenarios. If I'm fixing and flipping, or if I'm just coming to you and I just want to purchase this 4 unit, this 8 unit, just bring us through the process of coming to you and going after hard money.
All right, not a problem. So if you're coming in with a fix and flip, depending on exactly, like, just like you said, it's all based on the experience. It's not based more on the person. It's based on exactly what you've done, right? So we're gonna go ahead and tackle your real estate schedule. Your real estate schedule is literally your real estate history. How many flips you've done? How many properties you own? You know, like all that good stuff. If you sold anything, are you still keeping anything in the past 3 years? They look at that, the past 3 years. So in the past 3 years, whatever you've done, that's exactly what they're looking at. Anything you've done before that, it doesn't really count, because you know what? Experiences change. So throughout that time, they're only looking at the past 3 years, right? So once you actually go ahead and do that, we can go ahead and determine exactly what is your down payment. What is the threshold that you actually fit in? So if you're brand new, you're coming in maybe like 25, 30. I've actually seen like 20% if you actually own a property, because they consider that it's some type of experience, right? Well, that's some lenders, right? So you can go in on that side. Now, it's a simple formula that you just need to, I'm pretty sure you've heard this everywhere. Like, there's the 70% rule, right? So you go ahead, when you're actually looking at a property, you're gonna go ahead and evaluate it. You look at the ARV, check on Zillow, check on like realtor.com, check around, even ask a realtor, seeing exactly how much is that property worth when it's actually fixed. Is it even a deal? You know what I mean? Like, if the property's worth 400,000 fixed, right? And you're getting it for like 200,000 and needs $100,000 in work, right? Maybe the threshold is that, hey, we're going to use simple numbers. That's maybe 75%, right? But I'm just going to use that just as a simple, like, you're going to go ahead, use that 100,000 to fix it, right? And your purchase price is 200. Your all-in cost is 300,000, right? That's actually 75% of the ARV, because the ARV is actually 400, right? 5% less, you can actually go ahead and get a little waiver to actually go ahead and offset that. That's beside the point, you know? But that also comes with experience, because they're not going to give that to actually somebody who's coming in. Somebody who's brand new, they're looking at 65, if they can 70, but they don't try to push it. There's no cushion on that side. If you have the experience to actually back it up, you've done at least like 5 deals, 6 deals, they're going to go ahead and start actually being more lenient towards you, because you kind of know what you're doing. You know, that first one is a little shaky, so they're like 65 all the way. You know what I mean? You're getting 65%, because they want to give you room to go ahead and mess up. And if you mess up, they want to give themselves room to go ahead, buy and have it on, so they can go ahead and foreclose and resell it and still make a profit. So that's the reason why they do it that way. Okay.
Gotcha. So for the 65, so that's basically 80-20 for the purchase price, 100% of the rental, and all in, that whole acquisition has to be 65 of the ARV. But if
Correct.
it's not, you have to come more out of pocket. It's not 80-20, it could be a little bit more. You're gonna have to pay for some of your construction, you're gonna have to pay for this, but all in, full acquisition with construction is 65 ARV, right?
Correct. Bingo.
And how about credit? Talk to us about credit. How long does the seasoning for assets have to be in the bank? If it's a partner involved, talk to us a little bit about that side.
Okay, so on the credit side, it's pretty cut and dry. It's actually like around 660. You could do a light file with that. They don't really care. Like I said, it's not, they don't really base it too much on the person. They just want to know that the person actually pays their bills, you know. So a 660 is actually doable. You know, that's the minimum that they go ahead and do. As for seasoning, it really depends on exactly the bank that you actually go to. right? There's some banks like Visio actually has no, what is it? I think they have a, when you do a cash out refi on the long term, they do no seasoning. So as soon as you go ahead, rent it out. Wait, I'm jumping again. Oops, too much info.
No, you
So
go.
let's stick with just the flips. So just with that, they usually for fix and flips, they'll do around like, I don't know, maybe like 90 days, give or take, because they want to actually go ahead. Remember, they're short-term loans. So you're looking at anywhere from like 12 to 18 months, right? So they need to recoup all that money. So the seasoning at a minimum, they're going to go ahead and do like 2 to 3 months, right? At a minimum, right? But on average, a flip anyway takes about 6 months. Throughout the pandemic, it was a little crazy. You can go ahead, wrap something, wholesale it, pretty much slap some paint on it, and then just go ahead and put it back on the market, which was like maybe like 3 or 4 months tops. You know, it was, and it'll be gone. You know, it'll be gone. You know,
Right.
so, but everything's going back to normal. And when I say normal, everything is going back to pre-COVID. And that's where we're at now. This is the mentality that everybody has to have between like 203Ks. As a matter of fact, just to actually chime in on that, 203Ks and short sales for first-time home buyers or people that are actually trying to get into it, that is literally going to take over for at least another 2 years. That is going to be the new wave, because guess what? Now, between interest rates being so high, and then on top of that, now you have all this inventory, and a lot of the inventory that's coming out is a lot of fixer-uppers, because guess what? For the past 2 years, we didn't have any. So now you have an influx of all these properties that actually need repair, and all these old good houses. Like, why would you actually want to get into something like that when you can go ahead and customize something at your pace without actually having competition on exactly like bidding on, like having a little bidding war, you know?
Yeah.
Like, it's still happening, honestly. It's still happening. Like, property is still like kind of like flying off the shelves, especially like the newer ones. So if you're gonna get a fix and flip, like, and you haven't owned a property yet, get into a 203K first. Finesse it out. Have somebody actually guide you through it, you know? Like, so, because you have a HUD consultant that actually goes ahead and holds your hand throughout the entire process, you know? And because once you actually do this side as an investor, you're alone. Unless you have a mentor or an experienced partner, you are alone. There's nobody to call and nobody that's gonna go ahead and be like, yo, listen, I need your help in the middle of a project. They'd be like, yo, bro, you already fucked up.
And he'd be like, yeah, I got my own stuff that I'm like worried about,
Like,
you
you know
know,
what I
and
mean? Like,
handling stuff.
listen, like,
And that is a 203K loan. I absolutely love it. It's how I got my start. Created a basement apartment. You know, everybody knows my story. Me and wifey stayed down there. We rented out the other unit. But like, it was exactly how I got my start. And the biggest reason why it's a lot easier, that I definitely do want to point out, is because with FHA 203K, the bank will give the money directly to the contractor, which can be good and bad, but the bank will give the money directly to the contractor. When you're doing non-QM loans or dealing with hard money loans, you have to put your money up first and then have whatever work that needs to be done. And then the lender will come out, make sure that everything's okay, and then they'll reimburse you, which a lot of people would forget about that. Like, you know, you might need an extra 20, 30 grand just to be able to keep things moving along while you wait for the reimbursement. And that's why I love 203K, because they just gave you the money right at closing. It was like, whatever you want to deal with, it's totally up to you.
Mm-hmm. And honestly, that's why I like it. Like, I have my contractors.
I would rather that.
Yeah, 100%. Like the flipping is great. Like, if you want to go ahead and make it into a business, because that's really what it is. You're getting into a business, and this is what a lot of people don't seem to realize. It's a whole different monster. Like, you need to have a whole team behind you. If you don't have the team, if you're going in it by yourself, and you don't have your lenders in place, you don't have your contractors in place, right? You don't have your realtors, your attorneys, everybody in place, then you're already setting yourself for failure, because those are the preliminaries to actually go ahead and get into a flip, getting your team right. If you get your team right, then everything else is easy breezy, you know? And another thing is just like, listen, partner up. Partner up on your first couple of deals, because it's not going to make sense for you to go ahead and try to figure all this shit out by yourself. Like, shadow somebody, like piggyback off those connections, you know, like, people don't care as long as they're making money. Remember that.
Right.
And I say this out of experience. People do not care as long as they're making money. Like, people are not going to roll out their Rolodex for you off the grip that, you know what, you're just a friend, or you're just somebody who's coming in who wants to learn. I'm not going to hold your hand so you can go ahead and make money off my back. And that's the one thing, like me as an investor and other experienced investors, that we do. Like, you can go ahead and partner up with them. There's so many of us, you know, but they want their cut, you know, at the end of the day. And that's what a lot of people, like, they become stingy. They're like, oh, I can do this myself. I could do, yeah, go ahead. Deal with the headaches. Deal with the headaches yourself then. But don't call me asking me how to do this, how to do that, because my answer is going to be the same. Yo, what happened? I thought you had this, bro. Oh, you don't? Damn, bro, that sucks. Oh, what you need? Yeah, I'll get back to you. I'll get right back to you.
Yeah, I don't need. Listen, this is the main reason why I don't flip, or why I don't like. I won't say main reason, right? Because if the opportunity, like, without a doubt, no doubt. I personally just hate the project. I hate the entire construction part. I hate the entire.
You know what? I love it. I love seeing the whole remake of a house. Like
I agree.
Yeah, like, we did that. You know what I'm saying? Like,
Yeah,
we did
that's what I did with the home I live in now. I live and flip. I haven't flipped it yet, but I bought it, fix up every single thing. You seen it, Austin?
Listen, man, it's absolutely beautiful, and obviously, like, you're living in there. And it's not even about like the turning. I just like. I just don't understand, like, when obviously when, you know, you're dealing with agents, you're dealing with mortgage lenders, you're dealing with attorneys, and not to say all of them are the best, but Lord have mercy, like, it just seems like we're contractors. It's just like that customer service, like, not having that customer service part in it just gets on my nerves, because I go through it when I'm just trying to fix a leak in one unit, like, and I can only imagine if I'm like trying to change out an entire floor. And I'm like, just get it done. I don't understand why it literally just can't be like, how much is it? When you gonna start the work? How much long is it gonna take? That's work. Like, fine, let's get it popping. I know that there's gonna be uh-ohs. I know stuff is gonna run under, like, over budget. One thing's for sure, and two things for sure. Every project is gonna take twice as long, and it's gonna cost twice as much money, right? So, like, we already know that. But for whatever reason, it's when that, like, gets blown past, as far as like the customer service aspect, or like, hey, like, this, you know, this ain't gonna look right for this weekend, or whatever the case. And then it's the dreaded, like, all right, like, well, let's just do this. And then, like, you turn around looking, and then all of a sudden the contractor ran off with your money, right? So, like, it just, like, when time is money in the flip, like, that is so important. Like, the timeline
every
is so
single
important.
day. So on a fix and flip loan, every single day is money. Every single day is money. You look, depending on your loan amount. If your loan amount is pretty much going ahead, like, let's say, like, it's like 30, like 3,000 for the month. I'm gonna just use a regular number, right? It's $100 a day that you're gonna go ahead and lose out. $100. Now, that $100 doesn't seem a lot, but compounding it for 30, that's $3,000 a month. Now, if you're not finishing your project in a timely fashion, then guess what? That 3,000 turns into 6. 6 turns into 9, and 9 turns into 12. You know what I'm saying? So it's a compounding effect, and, like, it goes right back to actually going ahead and building out your team. Once you actually have your team in place, then a contractor that you can go ahead, that's reputable. That's number one. That's actually done this before. I'm not talking about a guy that can go ahead and do your kitchen, your bathroom. You know what I mean? Like, that's not gonna save you from nothing. Like, if you want to go ahead and GC yourself, that's fine. Go get your GC license, but have the contacts to go ahead and be like, you know what? I have a plumber, I have an electrician, I have an HVAC guy, I have a what is it, a spackle team that goes in, puts in the sheetrock, spackles it, and paints it. You know what I mean? Like, you need to have all these teams in place. I have my flooring guys. You know what I mean? Like, you need to like think about all those things, all those aspects, even on finishes, like finishes and like punch lists are the most tedious out of everything, because the job itself is actually not hard. Like, they'll probably finish that first, but once they get to the finishes, forget about it. It's the detail that actually holds a lot of these people up, because guess what? Now, like, they got to put touch-ups here. They forgot like little, I don't know, like in one of my projects right now, we forgot to go ahead and cut a hole for the for what is it, for the fridge,
For the water line?
no, not the water line, the exhaust, the hood. There you go, the hood.
Oh,
So
gotcha.
yeah, so we forgot to punch a hole through there. The exhaust and everything else was running, so we punched a hole in there so we can go ahead and do that. Little minor details that, you know what, while you're doing the project, because you're looking at it as a collective, you kind of start missing, and you're like, hold up a second, this doesn't look right. This needs something. Or, you know what, we need to go ahead and put an outlet here, because we forgot to actually put an outlet in one of the walls. One of the walls is empty. You know, like, you start looking at all these little things, and it's time consuming, because now you're going backtracking. And when you have multiple projects, you need other people to actually like what is it, like, I pretty much like a second pair of eyes to go ahead and see exactly what's being done, you know, because you can't be everywhere. You know, I'm at a stage that I'm blessed to actually have the people that I have with me, and they help me out. Like, my home inspectors, literally, like, we did a preliminary inspection on one of the properties in Howell that we're gonna go ahead and list on Monday, you know, just to make sure that everything's up to par. And they did, they did fixtures, and I should have said they did fixes on the spot, you know. So while he was there, he pointed some stuff out, boom, 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 and we knocked it out, you know. So it's very crucial. Honestly, that's the reason why we started getting into the home inspection, because we needed to go ahead and get like preliminary like inspections before we go ahead and like sell, because I want to get ahead of everything, you know what I mean? Because I don't want to get into a flip and then I get an inspection report of all the fuckery, excuse my French, that is going on with that property, you know. And I'm like, as an investor, I'm gonna react like every other investor and be like, you know what, screw this list. I'm gonna fight this list. We're not gonna go ahead. We'll do this. We'll do that. We're not gonna do this. We're not gonna do that. I'd rather just know what's wrong with that house before I go ahead and list it.
Saves you money. That saves you money.
Yeah, it saves me money, headaches,
Right.
and surprises. I do not like surprises. You know, so that's literally how that partnership actually started coming about. Like, we have HUD consultants in there. We have contractors, obviously project managers. Pretty much like the wholesaling is also something else that we do. It's literally a one-stop shop when it comes to us. And that's literally what that what the Level Up group is. It's a one-stop shop.
What markets in Jersey are you in? Are you focusing only in north, west? Do you touch
So,
south?
I don't really try to touch the South. Like, the only property that we actually do have there, is probably like Howell. We do have some projects. Yeah, that's my month. It's what is it? Yeah, because that's like right by Freehold, so that's my month.
Yep.
So as far as now, we're probably going as far as like Plainfield.
Okay.
We got some stuff in Elizabeth, you know. So, but I'm like trying to focus more on just the northern side, because like geographically, it just makes more sense for my guys, you know. So I want to make sure I have my team and I'm efficient with my team. So I can't go ahead out of my geographical area to go ahead and like migrate them like to the south or even farther west, because now I'm paying them for 8 hours. Guess what? I got an hour drive time and an hour drive time back plus lunch. You're looking at a 5 hour. They're working for like maybe 5 hours, you know? So I had to be smart about it and keep everything more closer to each other, so I can get the most bang out of my buck. because our payroll is ridiculous. We're looking, and it's between 1 week it go anywhere from like 15 to 20 grand, you know, and that's just on payroll weekly, you know. So you want to go ahead and get the most out of it at that point, you know.
I agree. Just like we lost Austin, but that's fine. We'll continue. So what's next for you? You're taking over Jersey. What's what's next for you?
Honestly, just building out my the level up group. I think that's actually something that was needed, something that is something that a lot of people don't seem to have, because I'm great at sales. I'm great at what I do. I have the network. Now I focus obviously just in real estate, but there's a lot of people in this industry that are still small, that don't have those relationships, they're good at what they do, but they're not good at sales. So that being said, I'm partnering up with them, obviously, like on that side, and like taking a percentage of the company so I can grow that company and put it under my umbrella, so we can go ahead and brand it, and it's all uniform. It's all becoming uniform, you know. So I don't, like before I had like 6 logos and like 6 different brands I was representing. It was, number one, it's time consuming, it's confusing for a lot of people. It's confusing for me, honestly. And this is something I was talking to my partner Nathan about. It's so confusing. Like I had H-Desk Construction, I had Lakai Constructions, I had freaking Epic Level Up Group, I have freaking Best Housing Solutions, I have freaking More Business Loans. I had, like, it was so many different things. And I'm like, you know what? One brand to rule them all. Slap this everywhere. Boom, 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 boom. Level Up Group. And guess what? From there, I could go ahead and do Level Up Developers, Level Up Inspectors, Level Up Design, Level Up Property Group, you know, like, and it's easy because now all they're doing is just piggybacking off the brand while they're growing their business, because now they can use that as a DBA to pretty much marry themselves to us. And now you're part of a community, because now you're not in business alone. You're not. And that's the biggest thing here. When you're in business alone, it's hard to go ahead and connect. It's hard to go ahead and find those clientele that you actually need. Now, when you're joining pretty much a community, it becomes totally different, because now you're part of like a support system. And like, you know what, this is not what you're good at. It's fine. We have an accountant that could go ahead and help you out. She's been doing this. She's part of our group, you know. Oh, guess what? Oh, you need an architect? That's fine. We got this. You need inspectors? We got this. You need contractors? We got this. You know, everything's all in house. So it's literally about helping each other and like growing together. That's literally what I'm trying to do now. Like, and it's been working. I'm still working out the kinks for it, because obviously it's a little difficult when you're actually dealing with business owners that want to grow their business, but at the same time they're not necessarily looking for partners, which is fine, because you know what, if you're good at what you do, then go ahead and do it. If you've been doing this for 3 or 4 years and you're still at the same level, then you probably need somebody who can actually help you out with sales. Hire a salesperson. If you can't afford it, then I don't know what to say. This is why I actually offer it that way, because I'd rather take a percentage from the profit instead of actually going in and asking for money for something I haven't done yet. You know, let me produce, let me show you what I got. Let me show you what we can do.
Action.
So, you know what I mean?
Sales talk for itself.
Yeah, exactly. So the production will go in there and we go ahead and split that, you know? And I'm not even trying to go ahead and like take 50% or anything like that. I'm not trying to kill nobody. You know, at the end of the day, like, what people seem to realize is, like, even for me, like, I go out to all these networking, you know how much money I spend?
Are you in New York still, or you moved to Jersey?
No, I moved. So I was doing one of your, one exactly what you were doing. I was going ahead. I was living in my own flips. I was like, you know what? I was in Newark for a little bit. I had 2 flips there. So I was like, you know what? I jumped from one. When I was done, I jumped to another one. And then from there, from there, I went to Secaucus, flipped that one. Then I went to Dumont, flipped that one. Like, I just been jumping around, you know? So it's like, for me, it just made sense because I was single, I was by myself.
Mhm.
I like, my son's actually in Florida, so I didn't really have much here. So it's easy, you know what I mean? Like, I just need a bed.
Yeah.
The bed and the Uber Eats, like that's it, you know. Like I don't need anything. I just needed water to be functioning, and that's it. So you already know. Like you're living in one of your flips now. You know, it's like just
Yeah,
fixing it
I
up.
lived in my multi when I brought my first three family, lived there for a while, then moved. Yeah, same, but with family kind of, because I got three kids and the missus, so we all live.
I can imagine it was harder. It was a lot harder, you know,
Mhm.
especially trying to do renovations with them with the kids around. But
Yeah, that's
for me,
right.
it was so much easier. I just need a room. I
Yeah,
just need a room. That's it. Like
a room and a bathroom. You good?
that's it, bro. And this is like, anybody can do all this, and like all this can be achievable. And seem people don't seem to realize, like, if this is all you got and you want to go all in. Live in that shit. Make
Yep.
yo make the best out of it. And
Yep.
you know what? You living in there, guess what? Who's gonna manage that project better than you? Because you're living there.
Hmm.
You ain't going nowhere. You know what's going on.
You know the issues. You know what needs to get fixed. You know everything.
Yeah, exactly. And that's one of those things. Like, starting off, I was like, you know what? Let me just go ahead and start doing that. Like, it just makes more sense. Like, I'll live for a nomad, like a nomad, real quick.
Yeah,
Like,
man.
I didn't care about none of that. Like, everybody's telling me, like, I'm at a level that everybody just like, oh, dude, you need a new car. I got a Chevy Equinox, a 2016. I do not care about my car. My whole team rides better than me. My whole team rides better than me. And you know this. I just don't care. Like, my focus is not in the material stuff.
That growth, long term,
Yo,
delayed
this,
gratification type of mindset you
yeah,
need to have in this business, man.
100%. Like I've had investors that I tell them, like, listen, you want to invest passively, by all means, we can go ahead and give you a 15 or 20% return. And they were
Mhm.
like, oh, so why are you taking so much? I'm like, brother, who you think is doing all the work? You're gonna take 50% of the profits just because of your money? At this point in life, your money is in abundance for me. I don't need to ask, like, and people still approach me and still ask, and ask me why. Why what? Like, are you doing all the work? Are you going to
Deals, financing, project. Come
what?
on.
The headaches that come with it while you're still working your 9 to 5, while you're
Mhm.
like still, you're not even thinking about this. You're just gonna go ahead and get a return whenever I'm done with it.
Approvals. It's a lot of stuff.
Like, if you think about it, like, and this is one thing I'm like, listen, you have this money in the bank account. What is it? What is it doing for you? It's not doing anything for you, right? So investing with us actually makes more sense when you're going to go ahead and get a 15 to 20% return on your money versus actually going ahead and just leaving it in the bank. And the reason why we can't give you 50%, because it doesn't make sense financially for us, that we're going to go ahead and break our backs to go ahead and make sure that your money's safe and secure while you're going ahead and still making money. We're working 4 hours and you're still generating money on your side, because guess what? You're doing your 9 to 5. This is my 9 to 5. This is my 9 to 5. You
Bingo.
know?
Let's start our descent. These are the 4 questions we ask all of our guests. Number one, what is your favorite aspect about real estate?
Oh, my favorite aspect of it? Whoa.
Yeah, about real estate. Yeah, what's your favorite part about real estate?
My favorite part is honestly grabbing something from the very beginning and seeing exactly how it turns out. Seeing that end product and seeing somebody actually come in and love your final touches, seeing like
Yeah.
the details. And obviously the money's good, right? Like, we're not gonna lie about that. It is what it is. But it's just like the how do you call it? The deal hunting. The deal hunting keeps me on my toes. You know, I have like one of these mentees that I actually have. Like, he's into wholesaling. You know, I've been trying to guide him. He's a little hard headed, but like, the deal hunting is one of the things that actually always keeps me going. And my deals always have headaches. Like, they're not cookie cutters. Like, we have liens on title, like not even on the property, on the title and judgments and all kinds of stuff. Like, we're dealing with estates. We're dealing with, like, there's so many different issues that, like, I've become very versed when it comes to problem solving. And like, cookie cutters actually are pretty boring to me on that side, because I'm like, all right, I could do this, like, or I could just pass it off because it's easy. But like, deals in general, like just the deal hunting, like going into a property and be like, seeing the potential that it can actually have, and be like, you know what, I could see myself fixing this up. I like it. I can see exactly where I can go ahead and tear down that wall, make space, right? Going ahead and seeing the backsplash, the final touches on exactly that that kitchen, making that little waterfall, what freaking island that that people love now, like, just doing all that and actually creating something out of nothing, out of something that was already people gave up on.
Yep. How do you find the ideas?
Me?
Word of mouth? Word of mouth?
A lot of different sources. I have this you still have the auctions, you still have other banks. I have relationship with banks, probates, probate attorneys are actually a good one, building out those relationships with probates. Pretty much we also have the wholesaling side. So on that side, we don't do cold calling. We actually do a lot of PPC, which PPC is paper-based. So we have a lot of people calling us about their properties, so they want to sell. So instead of us pretty much going out there, like, cold calling is very tedious for me. Like, I cannot deal with it. And I would not recommend people to do that. Like, for me, it's so time consuming when it comes to that, unless you're getting like VAs to go ahead and do all that stuff. Yeah. But at the end of the day, like, what's your return on your investment? Like, how many of those calls you have to make to actually go ahead and get a deal? So for me, PPC actually works. You get 2 or 3 leads maybe throughout the week. You call them up, you probably get like 1 appointment, and if it makes sense, it makes sense. But throughout the month, you go ahead and do it repetitively, right? You'll have that one deal, 2 or 3 deals throughout the month that you actually go ahead and fix, or wholesale. Like, me personally, when I want to get into something, I'll be like, you know what, that's a good deal. I'm gonna go ahead and get it. If I like it, but it's I'm either tied up or I'm over leveraged, I'll wholesale it. I've done that a couple of times. Like, I wholesale a lot, because like, I have a lot of people that always ask me, like, yo, dude, like, I need a deal. I'm like, yo, I'm sitting on this one, I just need like 15,000 on an assignment fee. And I'm very like transparent. I'm like, well, it is what it is, because a realtor does the exact same thing.
Mm-hmm.
That's all it is. Like, a realtor is going to show your house and sell it. They're making 3, 4, 5% on that deal. Guess what? 10, 15 grand is pretty much on the average on exactly what that is. So I always charge that, just in case, because it is what it is. Time is money.
Yes, it is. Question number 2. What is your favorite business or personal development book?
Personal development book. That's actually a good one. Machiavelli's Prince, like I told you.
Nice.
The Prince is, like I said, it's a good book on exactly learning exactly how to react to other people, and like, people of position and power, and exactly how to stroke their ego without demeaning exactly who you are. So that's actually one book. And another book would be the 12 Rules of Life. Oh no, for Life, sorry. The 12 Rules for Life.
12 rules for life. 12 rules for life. Nice. All right. And to the rotation. Question number 3. When you're not out doing real estate, combining business together, what do you do in your spare time?
Real estate. When I'm not, like, listen, my girl could tell you right now, she's like, she's in the industry, but my whole thing is just, when I'm not, I'm looking for deals. When I'm literally like, I get emails. I'm analyzing deals and seeing exactly if deals make sense, following up to see exactly what my guys need and stuff like that, because I'm trying to always perfect my craft. So even when I'm not working, I'm working. I think the only thing that I probably do is Sundays. Sundays is like the only day that I take off for myself to decompress.
Nice.
Like, I don't take no phone calls. I don't work. I don't want to hear about work throughout that entire day. I just lounge around, just chill out and decompress. That's when I actually catch up. Anime. I watch anime.
Nice.
You know,
Nice.
a little tidbit that nobody really knows, but I do watch anime.
Okay.
You know, yeah.
A lot of my niece and nephew love the anime, so I know a few about some anime stuff.
Yeah, it's just trying to escape from the reality for at least a day. You know what I mean?
Yeah, for sure. They got some interesting, dope ass story. They're really creative with that stuff, man.
Yeah, they definitely are.
It's insane.
I love it. You know, like I've been watching One Piece since inception, like almost like, I don't know, 17, 18 years ago. It's crazy how long that show's actually been going along, but it's still going, you know, and the storyline's actually still, it's still juicy, still good, you know. But those are the things that I do personally, like when I'm not actually, like, I guess, working.
Gotcha.
That's it.
Question number 4, because my phone keep blowing up and I have to keep ending these calls. Where can people
yours
find
too,
you?
right? Where can people find deals?
Find you.
Oh, find me, JT.Morel.
Boom.
At IG. That's it. It's cut, drive, just put JT. I usually pop up. You know, if not, JT.Morel and on IG. That's it. You know, as a matter of fact, there's actually a 5-step guide on funding deals in my bio, and they can go ahead and click in there. It's a free book. Yeah, it's free. Like, I'm not one to actually do courses and stuff like that. I think we spoke about that before we actually got on, because courses for me, like, I don't have the time to sit there and like teach a class.
Mm-hmm.
Like, I'm extremely busy. So me going ahead and trying to deal with students and all that good stuff, it doesn't make sense for me at that moment. Like, I could do a seminar, I could go ahead and allot time for all that good stuff, but on a weekly and daily, like, I have a whole business to run. And it's hard to go ahead and try to do courses. And yeah, it's just not in my schedule. Maybe in the future, but not now.
Nice. JT, thank you so much for your time. I learned a lot about you. Thank you for keep crushing New Jersey, keep taking over Jersey, and I'm sure we'll definitely try to do some partnership later in the future.
Yeah, definitely, man. You're like the 203K guy, man. Like, I don't know, man. Hey, we definitely got to start working, baby. We definitely got to start working.
Let's do it, man. Soon. Coming soon. Let's speak it to existence, man. We'll make it happen.
All right, let's do that, bro.
All right, man. Thank you so much for your time, man.
All right, my brother. Take care.
Real Estate Blueprint Podcast signing off.